Right. Okay, guys. So now let's start with a new chapter. Okay. So that is standard costing. Okay. Now this particular chapter, as you guys know, it has been perceived as difficult by majority of the students. But I personally feel that it's not that way. So only the thing is that you just need to get the hang of it, and it would come naturally. Now, there are so many, people say that, okay, let's leave this in choice and stuff like that. But let me tell you one thing, guys. The standard costing chapter is just like learning how to drive a car for the first time, or learning how to balance the two-wheeler, bicycle, or a bike for the first time. So it means like what I'm trying to say is that it seems so impossible when you see it for the first time, but then once you get the hang of it, in the sense that initial phase where you'll find it rather uncomfortable, but you have to bear with it and then just move on, just cross that particular initial phase. Once you're able to do that, then it would be the most easiest chapter for you of the lot. I will take it in that particular way, or you will understand. So this particular thing, you guys need to keep it in your mind very clearly. So don't be a loser, okay? So try to ensure yourself, tell your mind that, okay, fine, this is the one that's gonna trouble me. Now I have ego with myself, so I'm gonna dominate this particular chapter and I'm gonna see it to the end. Are you able to understand? So that's all the little 30 seconds pep talk that I wanted to tell you. Let's right away get into the chapter. Now, the first things first, you guys know that standard costing is a technique of costing. Okay, similar to budgetary control, where the purpose, there are so many uses of standard costing to be precise, but the majority of the use will be cost control and performance management. Majority of the use will be cost control and performance management, in the sense you want to manage, right, Anna? So we know that this is the basic idea of standard costing. So it's a technique of costing which is predominantly used to control the cost and measure the performance and manage the performance in totality. Anyways, so that's a basic idea. So let's get into the chapter once. Now, first of all, before we get to the entire chapter, first we need to understand the world of standard costing. What do you mean by world of standard costing? I'm just gonna give you a complete idea, overall idea, I mean to say, just like a, you can say a bird's eye view, something like that, of the entire chapter. Okay, so it looks like this. So first what's gonna happen is that you're gonna set standards. You're gonna set standards, and then eventually actuals will happen. And the difference between standards and actuals, we call it as variance. And once you have got the variance, which is nothing but the difference between the so-called standards and the actuals, the difference between these two, and these variance has to be investigated. So the next step will be investigation, which means you'll try to find out who is responsible for that particular variance. Okay, is it controllable variance? Is it uncontrollable variance? Controllable variance means somebody should be responsible. Why? Because it is within his control, right? Uncontrollable variance means obviously it is beyond the control of human beings, or that particular, say for example, purchasing department manager or production department manager, whatever it is. Okay, and then so that you need to figure it out. So how would you know that? Only when you go for investigation. And once you're done with the investigation, and once you know that a particular person is responsible, then you would like to take countermeasures. You would like to take countermeasures. Countermeasures means taking some steps such that the so-called mistake, in variance is seen as a mistake, the so-called mistake will not be repeated in the future. Such that the so-called mistake will not be repeated in the future. You got the point, guys? So this is the total world of standard costing. Now, after taking countermeasure, what will happen? Again, you will set the standard for next quarter or next year or something like that, and then the same stuff will get repeated. So to put it very simple, this is what we call it as world of standard costing in a very gist manner. Okay, set the standards, actuals will happen, then you calculate the variance, which is the difference between the standards and the actuals. not the budgets and the actuals. Please try to keep that in your mind. And then you calculate the variance, and then you will do investigation to figure out who is responsible for this variance. Is it a controllable variance or uncontrollable variance? And then you will try to take counter measures. Right. Okay, now after that, there comes a basic question. First one. What is the standard cost? So we are quite frequently using these terms. We have seen it a lot in our inter as well. So what do you mean by standard cost first of all? What does it mean? So let's start with the basics first. So the standard cost basically means estimated unit cost. Normally it will be the average of so many estimations that you do. So we can also call it as averages. All the standards are averages, to be very honest with you. All the standards are basically averages. Okay, so what is that? We'll see later in detail, but you guys need to understand one thing, that when standards or averages, the common sense should tell you that a little bit of variance is bound to happen for sure. Are you able to understand? So when you take a standard as an average, then obviously what will happen? Little bit of fluctuations will happen. So therefore, all the variances will not be investigated. Only certain variances will be investigated, which breaks the threshold limit that is kept by the management. That particular concept of investigating only a particular variances which breaks the threshold limit, we call it as management by exception. That we'll see later. Anyways, so now the basic point that you guys need to understand over here is, what is the standard cost? It is an estimated unit cost. So what is the standard cost? It is an estimated unit cost. You got this? Chalo. So if you want to have a little bit of detail on it, I'll tell you this way. A standard cost, okay, is estimated unit cost, okay, which is built up of standards, for each cost element. Okay, right. What is this, sir? We'll try to understand with the help of an example. Okay, it's a pretty simple understanding only. Standard cost is estimated unit cost built up of standards for each cost element, because a finished good will have so many elements of cost like material, labor, variable overheads, fixed overheads, stuff like that, right? Anyways, so all those elements of cost, they put together, they built up to become standard cost for the entire finished good. Okay, now obviously the next question, sir, what are its uses? Can you tell us in brief? Okay, so we are trying to talk about uses of standard costing. Okay, I can say it is used to value inventories. Normally, you will value a stock based on standard cost only most of the times. You don't go for actual cost quite frequently. Why? Because there is a logic behind that. Actual cost tends to fluctuate because of temporary fluctuations also, which should not be actually considered. It is just like how we say, whenever there is abnormal loss or anything abnormal that is happening, you try to put it in the costing P&L account. Don't try to bring it into the valuation of the normal finished good, okay? Because there is no guarantee that it will happen again. That's why the word is abnormal, right? So therefore, when you try to value your inventories based on actual cost, so basically what happens is that your actual cost is affected by temporary fluctuations. And if you value your stock based on, or inventory based on actual cost, then that's also affected by temporary fluctuations, and that's not the right way of valuing your stock. So mostly we will value our stock based on what? Standard costing only. So let me write the heading over here, completely uses of standard costing. Okay, to value inventories. Then also it helps you to prepare cost budgets. Standard costing also helps you to prepare cost budgets. All these cost budgets are based on standard cost only. Okay, for what you're gonna prepare cost budgets? For production, obviously. Okay, also to provide control information, we need standard costing. Control information means basically I'm talking about variances, because these variances are utilized to control the cost. This is the way you are controlling cost, right? This is how costs are controlled using standard costing. Okay, so basically you set the standards, then you see the actuals, then the difference between standards and actuals, you call it as variance, and you'll try to figure out the reasons why that particular variance has happened. Is it controllable or uncontrollable? Then you'll try to take countermeasures such that it doesn't repeat in future. Thereby you control the cost. That's the logic. When you try to ensure that it doesn't repeat in future, you're actually trying to control it. Okay, so that's the point. Anyways, now look at the definition over here. I already gave you the definition of standard cost over here. So that is, a standard cost is estimated unit cost built up of standards for each cost element. So what do you mean by that, sir? We'll try to have an example for this. Okay, chalo. Okay, in this example, what we're gonna do is that we're gonna take a product called product. What can I say? Spool. Let's say there is something called product spool. Okay, right? Anyways, now, so let us see how the standard cost card looks like. Of that particular product spool. Okay, so it will have particulars on one side, then it will have cost on one side, then requirement on other side. Let's see how this works. So first I'll start with direct materials. Let's say this particular product called spool requires three types of direct materials: A, B, and C. And coming on to cost column, A is 2 rupees per kg, B is 3 rupees per kg, and let's say C is 4 rupees per kg. Let's put it that way. Now the requirement is you need 6 kgs of A, and let's say 2 kgs of B, and let's say 1 kg of C. Now C can be kgs, or you can take it as liters also. See, sometimes this is what you guys need to understand. Let me put it that way. So it's not like all the input should be similar. It should be solid and stuff like that. It can be anything. Okay, so let's say this 4 rupees is per liter and it requires 1 liter. Now that would be even more better for you to understand. Okay, now tell me what will be your total cost in terms of rupees over here. So this will be 12, this will be 6, this will be 4, sorry, yeah, okay, so which means your total cost will be 10. Yeah, so 22 over here. Let's say we'll take another raw metal as well, others. So you'll have sometimes ancillary raw metal as well. Generally this we call it as main and this we call it as ancillary, so that you'll have a better idea of how things will be in real life. So let's say this is 2. I'll take it as 24, the total cost. Okay, then we are done with direct material. Then let's go with direct labor then. So coming on to direct labor, let's say you have 2 types of direct labor: grade 1 labor and grade 2. Okay, and grade 1 is 4 rupees per hour, grade 2 is 5.4 rupees per hour. Let's put it that way. And you need 3 hours of grade 1 and you need 5 hours of grade 2. Okay, let's presume it that way. In that case, this will be 12, this will be, I think 5 is 25, 27. Okay, right? So which means this is gonna be 39 will be the total cost. So now I'm done with direct material as well as what? Direct labor for this particular standard cost card. Okay, let's move on to the next one. The next one that we're gonna see is variable production overheads. Okay, and then you also will have fixed production overheads, obviously. Now variable production overheads, let's say it is 1 rupees per hour, and you have 8 hours, so which means it will cost you 8. Fixed production overheads, let's say it is 3 rupees per hour, and you have 8 hours again for the same, it's going to be 24. Okay, so this will cost you somewhere around 32. Okay, right. In that case, what's going to be your total cost of the product? So this is nothing but standard full cost of production, in the sense producing that particular product's pool. So it's going to be 24 plus 39 plus 32. 60, 71, 95. Isn't it? Right. 95. Okay. So this is how, a standard cost card looks like. Okay. So this, now you try to relate this with the definition. So a standard cost is estimated unit of cost built up of standards for each cost element. So this is the standard cost, which is 95 in this particular example. So it is the estimated unit cost built up. So estimated unit cost built up of so many things, okay, of standards for each cost element. This is one cost element: direct material, direct labor, variable production overheads, and fixed production overheads. Are you able to get me? You got this? You got this, guys, all of you? I hope this is clear so far, isn't it? Clear? Right. Now you might have a question, sir. Okay, so you mean to say the management has estimated all these things? How much of raw material A will be consumed, B will be consumed, C will be consumed? Yes. So let me put another question over here. The above info, or we can say the standard cost card, is based on estimates determined by management. Okay, how do they do that? There are so many things, like for example, based on the expected prices of materials, okay, labor, and other expenses. So they'll just try to estimate it. They'll expect that, okay, it will be so much, okay, and also based on efficiency levels in the use of materials and labor. Materials and labor. Okay. Budgeted overhead cost. That's also an estimate, right? Based on that only, they'll take the fixed overhead cost per unit. Okay. And budgeted volume of activity. What do you mean by budgeted volume of activity? If you have any idea about activity based costing, you'll be able to understand what I'm trying to tell you. So budgeted volume of activity, in the sense, what are the different kinds of activities you have got inside the company? So that also they'll budget. Normally it will be units, but now if you are following activity based costing, then you will try to budget the activities as well. How much will be the number of setups? How much will be the number of inspections, number of material requisitions? Okay, number of production runs, and all those things, etc., etc., etc. Right, chalo. Now already we have seen the uses of standard costing. Okay. Now here I have already told you that one of the use of standard costing is to value inventories, isn't it? Normally inventories will be valued based on FIFO or weighted average. But apart from that, it will also be valued based on standards. Okay, that's one thing. Okay, right? Anyways, so some of you, if you have that doubt, then I hope it's clear right now. So normally, yes, FIFO and weighted average is being covered, but still, standard costing is a better way of doing it. It again depends upon, right? Anyways, chalo, let's move on. Right. Anyways, now you guys can ask me, Sir, okay, only these three are the uses, which means it will help us to value inventories, to prepare the cost budgets for production. So once you know the standard cost per unit, then it becomes relatively easy for you to estimate your budgeted production cost and to provide control information. I mean, you are trying to actually control the cost. Apart from that, are there any other uses as well? Yes. So it has got other uses as well. Let me put it this way. Other important uses of standard costing. Sir, what are they, sir? Can you give throw a little bit of light on the same? Yes, of course. First one is it also helps to evaluate managerial performance. Now that's interesting. Okay, it also helps you to evaluate managerial performance. Right? That's good. Okay, apart from that, anything else? It also helps you to follow this particular concept. What is that? Management by exception. Okay, it also helps you to follow this particular concept called management by exception. Now, what is this management by exception? Okay, that might be your doubt. I already gave you an idea with respect to what is management by exception. Anyway, I'll repeat it one more time and then I'll write the notes over here so that it will be helpful for you to refer in future. So, management by exception means, as I told you, standards are nothing but averages. So, when standards are nothing but averages, what basically happens is by default you'll have some variances, okay? Because when you keep standard as averages, automatically by default you'll have a little bit of variance. Like, let me put it this way. So, let's say this is the standard and this is an average. Then automatically what will happen? The actuals will be somewhere here, isn't it? So little bit of variance will definitely happen. So therefore, it will be foolish on our part to investigate each and every variance. It doesn't make any sense because variance is expected to happen. A little bit of fluctuations here and there. So that doesn't mean that again we cannot ignore everything. So what we'll do is that we'll try to have a yardstick. We'll try to have a threshold limit. Okay. Let's say 5,000, up and above 5,000 only I'll investigate. Whether it's adverse variance or favorable variance, whether it is plus or minus, doesn't matter. Up and above 5,000 I'll investigate. Or let's say 10% either this way or that way I will investigate. Below 10% I'll not investigate. Are you able to understand? So like that you'll try to have a yardstick, and beyond that only you will try to go for investigation. Otherwise you will not investigate. Now this kind of concept we call it as management by exception. Okay, anyways, let me write it over here. So what is this? Standard cost. Okay, a standard cost when established is actually an average expected unit cost. Okay, and because it is only an average, okay, and because it's only an average, so what basically happens? Actual results will vary to some extent. So we're not trying to say that it's going to vary too much. It will vary to some extent above and below the average. Okay, above and below the average. So only significant differences between actuals and standards should be reported and if necessary investigated. Should be reported and if necessary investigated. You got the point? So this is nothing but we call it as management by exception. Okay, and this is also one of the important uses of standard costing, right? So let's move on to the next one. It is also used in decision making as well. How? Now, decision making is all about taking a decision with respect to future, right? We are not doing any sort of decisions with respect to past. So we are trying to take some decisions with respect to future. So standard cost will help you to predict some future cost. And while taking decisions, obviously prediction of future cost is so important because without predicting the future cost, there is no question of taking a decision. So therefore, we can say standard costing is also useful for decision making. That makes stuff, right? It also helps you to motivate staff. Now, how does a standard costing help you to motivate staff? Yes, of course. You try to set the standards and then link to the standards, you'll set your incentives or bonus and stuff like that. So therefore, they'll also feel the standards are challenging. So that will motivate them psychologically. And once they achieve the standards, they'll get incentives. So financially, that will motivate them. The bonus, the recognition, the awards, the coupons and stuff like that among your peers. So will definitely motivate you a lot, isn't it? It also provides guidance on possible ways of improving efficiency. So what are the current efficiency you have? Although too much of guidance it will not provide, but I'll be a little bit skeptical with respect to this particular point. Because normally what happens when it comes to standard costing, it presumes that your entire operations in a particular manufacturing company operates at a particular efficiency. Let's say it presumes at 95%, it presumes at 95% all the way, and if you achieve 95%, it's done. It never tries to better the things. That's what we have seen in Kaizen costing, that Kaizen costing challenges the very standard and then it tries to better it. So standard costing doesn't try to better it. That's why standard costing is a cost control technique, whereas Kaizen costing is a cost reduction technique. Okay. But to some extent, yes, it will help you a little bit to improve your efficiency. Thereby, probably that improving efficiency may reduce the cost. Obviously, it will reduce the cost, but not too much. Okay. So that's why it remains as a cost control technique and not a cost reduction technique. Okay. Anyways, so these are all the ultimate uses of standard costing. I hope we have seen this, isn't it? Right? Chalo. Right, buddies. So now let's move on to the next step. Okay, now we have seen the uses of standard costing. So the next question would be, uh, in what industry standard costing is actually suited? Okay, so where can we use standard costing? So that should be the next question. So where standard costing should be used? I mean to say, in what industries? Can it be used everywhere, in all industry? In that sense, can it be used on a service sector? All these questions we are trying to answer right now. So we'll finish that off. With that, we'll wind up this particular session. Anyways, now, the answer that you guys need to understand is that standard costing is most suited to mass production. Anyway, I'll explain you later. So the brief idea that you guys need to have is that whenever there is a repetitive process that is happening, repetitive ways of manufacturing a particular product that is happening, where you can estimate or you can expect what is the cost that you're going to incur, those are all the kind of industries where standard costing will be more suitable. But if there are industries where there is a lot of customization that's happening based on the customer's needs, then standard costing will not be that suitable. So that's why majority of the service sectors standard costing are not suitable. But some service sectors standard costing still works. For example, where you have a standard recipe and you mass produce it. For example, the best example or McD's and KFC, standard costing can be absolutely useful because you have the very specific standard recipes and you do the same for everybody. That too, you mass produce it. So it still works over there. Okay. Chalo. Anyways. So most suited to mass production and repetitive assembly work. Okay. Where large quantities of standard product are manufactured. Okay. So from this, what you got to understand is that the greatest benefit okay can be gained from whom? From standard costing only if there is large amount of repetition. Only if there is large amount of repetition. So only if there is repetition, what happens? Average or expected usage of resources can be determined. If there is no repetitive process, a large amount of repetition, I'm trying to say, then it will be very difficult for you to expect the average usage of resources. So when you can't expect that, then you can't implement standard costing. It's as simple as that, straightforward. Okay. Chalo. Now the next question can be probably okay. What about service sector? Can we apply standard costing to service sector? We can say it is not well suited to production systems where items are manufactured to customers' demand and specification. So forget about service sector. Even in manufacturing sector also, where you are manufacturing to the customer's demand and specification, you are customizing your things, standard costing is not suitable. Now, in case of service sector, in case of service sector, uh, any restaurants that deal with standard recipe, okay, for meals, then you can apply standard costing. Then you can apply standard costing. Okay. So you cannot calculate the same way you do it for a manufacturing sector, but still the principles are the same. But most of the service sector, as you know, if you are customizing the kind of work, the kind of service that you are doing, then obviously we cannot apply standard costing. That's the point. Okay, you got it? I hope this is clear. So that's it, guys. This is the first session on standard costing where we have seen the concepts, and in the next session we'll continue with the rest of the concepts, and then we have to see, there are a lot of other concepts to be seen, and then we have to see how to calculate the variances and stuff like that. But before calculating variances, we also need to see how standards are set, and then actuals will directly happen anyways, and then we'll see how to calculate all these variances and stuff like that, and then we'll move on further. Right? I hope you guys have enjoyed the session, right? Chalo. So let's wind up the session over here.